Good morning, everybody. My name is Kevin McAllister. I've been with PwC looking after private clients for a lifetime. And I think one of the things is, despite working, all of us working from home, I don't think we've been better connected. And I mean connected to our clients, to government, to HMRC, to banks. And in addressing questions or your questions to my colleagues this morning, I've asked them to reflect on what we're actually seeing across that sort of population. So maybe, Cara, since you're on your feet, question literally hot off the press, is this a time to raise equity, or are values so depressed in the current market that it's something that you shouldn't be thinking about at this point?
I think it's fair to say that it wouldn't be the best time. In my, I've worked in the deals market for a long time. I wouldn't say it's the best time to be seeking to raise new equity if you don't have to. But you know, I make that presumption because businesses will be under some pressure and the financials around that. You know, there are players in the market with capital, but I think, you know, if businesses can avoid it, at least in this very short crisis period, then I would try and do so. But that won't be the case for everyone, and I know there are some transactions continuing in normal course with interest in that. But I suppose the point I was making was that once we get through the kind of debt options, there may not be any other option on your balance sheet other than to issue new equity or put the equity investment in.
Thanks, Cara. James, probably one more for you. Is liquidity, are we actually seeing liquidity drying up to the extent that we might have anticipated?
Probably depends, Kevin, on the sector. I think, you know, for most they've flowed as normal, or there's maybe been like an initial slowdown, I guess, as people sort of come to terms with what's going on, or even just, you know, get themselves working from home and how they can make payments on that. So an awful lot of them are still flowing broadly as normal, but there's clearly a big issue for those where income may have dropped to zero, or you've got a whole bundle or whole season of stock in that you can't pay until you sell it. So, you know, I was speaking to some of the banks and they, over the last couple of weeks, and they certainly initially saw a real reduction in cash just flowing through the banking system, which gives an indication that there's definitely some. I think the loan schemes and the fact that money is now, albeit maybe slower than we would like, but it's certainly now getting into people's bank accounts. I think that's hopefully going to free up the cash a little bit. And you know, those loans are being made available to allow you to pay your suppliers. So I think, you know, it depends is probably the answer. There's a risk, you know, if everybody slows that up, there really is a risk of non-payment, you know, both on, you know, the economy, if everything drags to a halt, you know, your smaller business owners in particular who you know, who will be struggling, and, you know, sole traders who are relying on it for income. And ultimately, if, you know, if all of the cash pays up, there is risk of you know, legal action or insolvency, which nobody wants to, because everybody needs to be in this together. So I think, you know, we have certainly seen it, but I think hopefully it will start to free up. But there's definitely going to be some sectors that are facing bigger issues than others.
And James, a related one here is, any suggestions of how to chase an invoice when you believe you've been marked as non-critical? And it goes on to suggest, is it time to go legal in the current climate?
Well, I wouldn't rule it out, but I think probably unlikely that would be the first step, or even one you'd want to take lightly. I think, you know, if funds stop flowing through the system, as I say, we're all in big trouble. So hopefully, you know, the way I would certainly suggest before you go legal, because ultimately at the minute you might even find going legal is more difficult procedurally with the courts being closed and lawyers struggling to work from home. But I think trying to, you know, again, open that communication, and it might already be open, and apologies if it is, but, you know, even trying to agree some form of part payment or a payment plan over the next number of weeks, a weekly payment, might be better than going legal, which ultimately, you know, if everybody starts going legal on debts, then we're probably going to be in a big position. So I wouldn't rule it out, but I would definitely tread carefully on it at this time until maybe a bit more clarity is found on where we are. Okay,
thanks for that, James. Craig, if I could turn to you for a second, there's quite a number of questions around the coronavirus job retention scheme, and I've just tried to probably summarize them into two if I can. First one, how and when will we get our money under the scheme? And I think you might have dealt with some of that in the presentation, but if you just want to reiterate that point.
Yeah, thanks, Kevin. I mean, the government's guidance was updated just yesterday evening, but probably more telling was some insight that we got from Treasury Committee on Wednesday, the meeting. So, again, the points, and these aren't in the formal guidance yet, but the points that the Treasury Committee made on Wednesday were the portal would be open on the 20th of April, and they were hoping to process claims within 4 to 6 working days. And once this scheme was up and running, you were going to be able to make a claim up to 14 days in advance of the payment date. So it all looks quite speedy. Now it remains to be seen, once the portal opens, how easy is it to use? How intuitive is it? Will there be blockages? Will it be more difficult than this? But if it all works as currently intended, the speed at which you can get a reimbursement all looks quite swift, and indeed it's the point around simultaneous, if not even advance claiming. So prior to the payment date is the really key point here for businesses. That will hopefully, when this comes through, narrow the gap to almost nothing in reality. That's currently what we're hearing. It remains to be seen, of course, how this will play through.
And Craig, and if you just stay on your feet, there's a few questions around VAT and PAYE deferment, time to pay, and I suppose it's around, is this automatic, or what evidence do you have to give, and how do you go about making an application?
Yeah, well, say there that the VAT deferral is certainly automatic, but only until the 30th of June. Payments you might need to make in July, you might need to give this some more thought. So that should look after itself for the next few months at least. PAYE is a bit of a different story, I guess. If I reflect back to work I would have done 3 or 4 weeks ago in around St. Patrick's Day, we spent a lot of time on the phone to HMRC seeking to defer the 22nd of March PAYE bills for clients. Since then, of course, we have the coronavirus job retention scheme. So I guess it remains to be seen, if you pick up the phone to seek a deferral of PAYE, you might have to pay, say, in May time. We would expect you will get a bit more challenge if you're indeed a claimant under the job retention scheme, because of course revenue might make the point that you've just been paid an amount of money which should effectively pound for pound match the PAYE bill that they're due to pay. Now, of course, the reality will be it won't necessarily match your PAYE bill. You'll have staff that you're paying that aren't on furlough. You'll have staff who have tax associated to benefits that you're not being reimbursed. So you will still have cash outgoings that are not being fully matched by the job retention scheme. Therefore, I think these companies will still need to get their ducks in a row before making the request to defer. And again, this is back to James's point. Do you have adequate detail around your cash flow for this period? Can you explain to revenue why you're unable to meet this bill? Can you explain to revenue what else you've been doing as an organization to try to manage your other cash commitments, and why you're not necessarily turning to the revenue first? Of course, you'll have been doing work with your employees, your landlords, and your supply chain, and the guys have been talking around. But what I'm saying is, Ken, it's not an automatic deferral. You won't necessarily get a yes. How long do you want? You will get some pushback. And then I did mention the more formal time to pay arrangements, so that written installment period agreement, that it could be a slightly longer time frame on that. Again, you will need some detail to back up your argument on that. It will not be automatic.
Good. Craig, thanks for that. Very conscious of time. We've got about 2 minutes left in the Q&A session, so I'm going to try and get 2 for 1. So I'm going to address this one to both James and Cara, and I'm going to combine the question. Most companies fail, or more companies fail coming out of a slowdown than actually during it. How do we mitigate that risk? And then again, Cara, it's probably more to your point. Are we really seeing companies develop stand-up plans to plot a way out of this? So the two bits to the question: a lot of companies, more companies fail coming out of recession, and what are we seeing in terms of companies preparing stand-up plans to recover from this?
Yeah, Kevin, if I take the first one, I guess. So you're absolutely right. The expectation is that, as is often the case, that failures will come on the way out. And ultimately, I mean, there's no magic wand around this. With the support that's been made available, there are still problems ahead. I think, the sort of the three sort of phases they might come in, and concerns that we would have on how you might deal with them. So there's the sort of fact that you may, for those who furloughed, for instance, you may still have ongoing costs that are going through the business, whether that be insurance, rent, what have you, and they might just catch up with you. So the key there is just in terms of minimizing that spend, like we said, as much as possible, reduce those ongoing costs. The second bit may come, so the VAT, the time to pays, the deferrals, the loans, all of these things are still going to be paid. So I think the key there is, again, to have that cash flow and to just think through and plan how you're going to pay them back over the longer term. And then I think, finally, sorry, Kevin, finally, and just most crucially, I think from my point of view is, the furlough scheme may end when it's due to end, or it may defer a bit, but probably think that there's no way everything is going to bounce back to be 100% the way it was. So I think the key is to sort of use this time to plan for what a new normal under slightly reduced turnover might look like. Get a plan in place to make your business viable if turnover doesn't come back to 100% where it was, and just be ready to execute it. Because I think quite often the problem is that the challenges and those that fail are the ones that are slow to execute sort of a contingency plan to work out through a new business model. So, but there's no magic wand. It's stuff.
Cara, 30 seconds on stand-up plans and recovery plans.
Yeah, so I think it's been early thus far. This week, we've certainly been speaking to clients around their thoughts about to go to James's point, what is the new normal going to be in their business when they come back, or what they should be, what are they doing now? What will they make first? What will people want? So people are starting to be thoughtful about what the new business as usual will be for their own business. But I'll leave it there given time.
Thanks, Cara. And can I just thank everybody for your questions? We didn't get to them all. And to my colleagues at PwC, it's certainly going to be a different Easter break for most of us. And the only consolation is the weather forecast good. So at this stage, I'll hand back to Rodney, who's going to wrap up and close the session for us.
Okay, thank you. Our webinar is almost finished there. So I would like to thank James, Craig, and Cara for their presentations, and Kevin for managing the Q&A today. We have tried to get through as many of your questions as we could, and we hope that you found today's session useful. If we were not able to get to your question today, we do continue to update our business website, nibusinessinfo.co.uk, with the latest government guidance, advice, and FAQs. If you want to ensure you receive the latest news, please sign up for their email newsletter on the nibusinessinfo.co.uk website. We do plan to hold another webinar with PwC in the next couple of weeks to give you the latest updates. If you want to be notified of that, then ensure you've signed up for the Invest Northern Ireland 2-minute update email newsletter on the investni.com website, or keep an eye on the events section of our website. We did receive a number of questions today on the job retention scheme, which we could not get through. Our webinar yesterday covered the job retention scheme, and we will be making that available shortly on the investni.com website along with the slides for it. Today's webinar will also be made available on investni.com along with the slides next week. I would like to thank everyone for attending today.